Good evening once again, everyone. My name is Mirka and it's my pleasure to moderate today's session. I would like you all welcome to Efma's webinar on open banking coming your way. This webinar will take approximately 45 minutes and we will be joined by two speakers. Firstly, we will be joined by George Beatty from Efma. He is a senior advisor at Efma. Welcome, George.
Thank you very much. Well, great to be here.
And also Matthias Kröner, the founder and former CEO of Fidor Group, one of the Europe's first digital banks. Matthias, welcome to the session.
Thanks for having me. Good afternoon, everybody.
Okay, let me guide you through agenda very quickly. So we will talk about background slides on open banking. Then we will have a short discussion with Matthias, and after that there will be space for your questions. Please feel free to ask any questions either via chat or by clicking on small hand you can see on the platform, which will give me a signal for introducing your question. All of you are unmuted, so please, if you do have any questions, communicate by the hand or let me know in the chat. The session will be recorded and everyone will receive follow-up email with the presentation and recording. This is basically all from my side, and now I will pass it on to George. The floor is yours, George.
Lovely. Thank you very much, Mirka. Well, welcome everyone. I'm located in Sydney, and it's shortly after midnight. And of course, we're beaming into Matthias and Mirka, who are in Europe at a little after 4 o'clock in the afternoon, and also hitting the east coast of the Americas, which I think is about 10 a.m. or thereabouts. I've got 5 slides that I'm going to walk through, which gives a little bit of background on, firstly, the big picture of my view of open banking. I'll talk briefly about what is about to happen in the Australian market, make some comments about how open banking is potentially seen as a foundation step along the road of digital banking, and then start to think about what are some factors that would look like success factors for open banking, and start to wonder about how some distribution models and how they'd be shaped ultimately once the open banking system is settled down. But to start off with, principally, there's been a lot of regulation that's occurred in some markets. So regulation came into the UK and also into Europe in 2018, and it's about to arrive here in Australia. That's not to say that open banking hasn't occurred or is not occurring in other parts of the world. China is certainly being very market-driven without the influence of a regulator, and certainly Singapore and Japan are finding ways in which they can encourage the sharing of data. USA and Canada are somewhat behind in this area, but given the size of their markets and the degree of innovation that occurs, particularly in financial services, one would expect that they would rapidly start to ramp up. The big question on open banking is not really open banking, it's about open data. And of course, consumers own that data. And the question is, how can it then be shared in a proper fashion amongst market participants to end up with a better outcome? And I think there's 3 factors that are now driving open banking. One is regulators around the world in those markets that I've referred to. They're looking for greater innovation and stronger competition. And the outcome of that would end up fostering a level playing field as far as data is concerned, it would be a very free kick to gaining some more economic growth and efficiency. And in the banking area, it would certainly promote customers switching between accounts, which today is somewhat difficult. Equally, the one-click Amazon effect that we've all experienced over the last decade or so, we've now got used to digital adoption in our daily lives, and we're thirsting for that to be used in other areas of finance and banking. And certainly money management and using aggregated accounts is one opportunity. Coming up with a more efficient lending process using digital records is another. In many markets, some customers are excluded from participating in all products, particularly mortgages and other lending activities. And certainly, if you were to have the open sharing of data, you could easily eliminate payments middlemen in the process and end up with a lower cost and a quicker outcome. The third outcome, or the third factor, I should say, that's rising, that's promoting this, is the rise of fintech and neobank solutions, and they're happening at a dizzying pace. They're far more agile than banks. They threaten to give portable digital identities that will allow easy switching. But the biggest benefit, I think, of all is that there are applications that haven't even been thought about so far that are likely to arise. I'll switch on to the next slide now and briefly talk about open banking in Australia. So this is very ambitious legislation, which is legislating for a consumer data right across three industries. So firstly, banking, then telcos, and then the energy industry. It's scheduled to go live in February of 2020, and very shortly in July of this year, trials will commence for the exchange of data across deposit, transaction, credit and debit cards for the big four banks. Why is this different? Well, to what's occurred in, say, the UK? Well, firstly, it's dealing with three industries, not just banking, but telcos and energy. It deals ultimately with all banking products and not with a selection of products that's occurring in the UK. The whole principle of consenting to allow your data to be used by participants is something that is somewhat fraught. And in the Australian experience, so far, it looks as though it will be 12 months worth of consent that will be legislated for. In the UK, that is 3 months worth. So that is a point of some conjecture, because that potentially causes more friction. In the Australian experience, though, it will only be read access. In other words, participants are able to read the data, but they're not able to write it. In other words, you can't implement a payment mechanism as a result of this, unlike the UK. I'll now switch to the next slide. And my point about this slide is that really open banking is simply a staging post or a foundation step along the digital road. Ernst & Young or EY have done a fair bit of work in this area, and they've looked at various markets, and they find that consumer sentiment toward open banking is likely to be a very major factor affecting its ultimate progress and success into the future, even in environments where strong regulatory and innovation environment is already established. So if you looked at that graphic, you would see that there's a high percentage of customers in the purple color, which are very positive in their social media interactions regarding open banking, and some that are negative. And that blue bar there reflects what is the net sentiment percentage. You can see that Australia and China, mainland China, are very high on that scale. And there's a considerable degree of difference as you run down it into, for example, the UK and Germany and Spain towards the bottom. The things that have come out as being very positive is that customers like the whole concept of control. They like taking charge of their own data. They're also very keen on innovation and thirsting for the potential for new services. Some things that are coming up as negative sentiments include data protection. People are concerned about fraud, and also cybersecurity, leading to potentially the misuse of data. I'll now turn to the next slide. This is just a framework that talks about some prerequisites for success. Given what was said on the previous slide, obviously the whole issue of trust and consumer readiness is a big issue. However, if the open banking rollouts were executed well and given sufficient time, then they will deliver real benefits, including mobility for account switching, inclusion for customers that today are on the periphery, and they'll certainly give rise to new distribution models. And that's a very exciting outcome and could deliver lots of benefits to communities. So, summarising what this means, open banking could be seen to be legislating for or laying down a set of standards for data railroad tracks. How is there a common standard for the exchange of data? What are the rules that allow this to occur? What are the sanctions involved? And that would go a long way to promoting trust and confidence in the new world of data sharing. And also, it would deliver reduced friction. In other words, not making it difficult for participants, particularly consumers, to give their consent in order for data sharing to occur. Putting all that together, you could end up with fostering of new and exciting distribution models. And they could be situations where there's a platform, potentially. They could be situations where an existing bank steps back and as part of an ecosystem and contributes, but is not the primary brand in that ecosystem. There'd also be concepts as banking as a service or white label banking that could arise under those distribution models. So a whole range of new and exciting ways in which banking services could be delivered to customers, both consumers and to SME customers. Ultimately though, the whole concept of data openness, over time, it'll simply become part of daily life, just the way that the internet is in our own daily lives today. Moving to the final slide now. This is some of my thinking, and maybe we can discuss this, but my thoughts are that because there are different products, some that are highly regulated in some markets, my thought is that these new distribution models will be shaped by geography, by the legislative environment, by the product type, and by the profit pool. And my thinking is driven a lot by recent experience around responsible lending laws in my home country and here in Australia, which also exist in the UK and other countries. And effectively what that means is that whoever plays in the lending market has to be prepared to deal with both credit and legislative risk. And that means that the profit pool has to be big enough to accommodate the offsetting of those risks. Obviously, the other geographies that would come into play would be Europe and its approach to regulation, including GDPR and also privacy. And then the other product types, which today you can start to see how they would start to play out. There are a whole range of neobanks that have now arrived with a high degree of success in terms of signing up customers, principally they're around the payment mechanisms across border, and they're not so far in the lending space. So my thought is that geography will preclude large platforms ending up with a universal approach to the distribution of all banking products. I think that those that don't involve lending will certainly align themselves with a platform approach, and we can start to see that happening already in Asia with the rise of Tencent and Alipay and the others. In the interest of time, I'm now going to stop, and what I will do is invite Matthias to contribute, and I'll put some questions to Matthias because he has strong background, of course, with neobanking, with being the founder of Fidor Group. So Matthias, it's great to have you on the webinar and to learn from you and your experience and your opinions. And the first question I've got for you is, in your opinion, what's been the real response to PSD2 in Europe compared to what was the anticipated response from established universal banks?
So, George, many thanks for your introduction, and many thanks for inviting me to this wonderful opportunity. Well, you know, when PSD2 actually some years ago started in a discussion, I would say all over Europe, everybody was very excited about it. In particular, the fintech environment was extremely excited about it. Today, we have having a kind of first milestone. I would say that obviously lobbyism created more hurdles than it created simplicity. So we can see that we have, instead of a standardized European approach, we have national dialects in this. The whole thing is definitely more complex than maybe needed, and it took definitely also longer than maybe needed. So I think it was a good start. Conceptually, it was a perfect start. However, execution seems to be, there's room for improvement. Let me say it like that.
Okay. All right. Building trust. Yeah, go ahead.
Yeah, no. However, George, actually, what I might add also is that wherever I am traveling and having international conversations, I'm extremely proud to hear that all other regions are taking PSD2 as a role model and taking it as a reason for their own local initiatives, or at least as a role model for their own initiatives. And listening to you regarding the Australian approach, actually, I would say it's a perfect example to see how, let me say, a basic initiative, first of all, maybe happen in Europe, but you now and the Australian regulators take it next step ahead, which is integrating other industries and so on, which definitely with PSD2 is not the case. So I think it's a good start also for the international development, and I think everybody is invited to do it better than we did it on the European continent.
Well, thanks, Matthias. Look, at everything in life, of course, is a learning process, and I think that other markets have learned a lot and are building upon what's happened already. It seems as though building trust about data processes and accredited participants seems to be a key issue because it's new. Some people have criticised what's happened in the UK and Europe as lacking consumer involvement. Some people, in fact, have called it or described it as a slow burn. Does this explain why markets are not rushing to advertise the merits of open banking?
Well, maybe the whole data protection, the whole, let me say, internet trust topic issue seems to be at new peaks, that we see how many attacks are actually happening day by day, that we see how much of data is misused by any kinds of player in this environment, that we see a more and more even political misuse and discussion regarding the usage of all this. I think the internet itself definitely has that kind of overall problem to gain back maybe more on this trust topic. However, again, comparing that to international standards, I would say that on the level of distrust, Europe is leading. Your slide on consumer acceptance of open banking is definitely showing that. In Asia, I would say people are way more open to any kind of web-based services than they are in Europe. So the data and the trust topic needs to be solved anyhow. That's a major topic. Otherwise, we can forget about the web business in total. And I know a lot of initiatives also starting out of Singapore, MIS regulator, that take care of the consent topic, of the opt-in, opt-out topic, maybe thinking of bilateral corridors for data exchange and so on and so forth. Cloud banking, by the way, is another topic related to this. So where is a cloud located? Does a cloud necessarily store my data on ground, national on ground, or can it be international and so on? So there's a long backlog list, I would say, a long backlog of open homework topics.
Indeed. Matthias, there's a lot of technology talk that accompanies open banking. And I know a lot of that is around APIs and standards and who is doing what. The question for you is technology driving open banking or is it facilitating it?
Yeah, chicken and egg question, isn't it? So out of my philosophy, and I'm more like the market guy, which is creating a little bit of a bias, actually, to my opinion. Out of my discussion, out of my perspective, of course, it is first of all a customer-centric view we have to have, and a customer-centric approach we want to execute. Once we have that kind of customer centricity in us, actually, open banking is one tool of fulfilling the customer's needs and desires as a bank, and APIs and maybe other technologies or other technologies might support us by doing so. I seldomly would have experienced that actually a tech department is developing an API, is walking up to the market team and then is saying, hey, we've got an API, do something with that. So I would say it's definitely the other way around. So it's always, let me say, a customer-centric problem statement that drives innovation, or in banking, it is the regulator. So these are the two reasons actually to drive innovation. And mainly the customer-centric problem statement is not coming from the bank, but maybe from retailers or other industries that have a very close understanding of their customers. So to answer your question, and that is maybe sad news for the tech guys, but I would say it's really the customer problem statement and the regulator who is driving innovation. It's not the tech itself.
Right, okay. At the beginning, I outlined where regulators have stepped in forcefully and tried to drive some more competition and better outcomes, and they were the UK, Europe, Australia. There's a far lighter touch that's happened in some other markets. But what would be the implications for those markets where open banking has not yet been regulated or supported? And what are some lessons learned so far?
Yeah, that's a good one, because we today do not even see the outcome of open banking in the markets where it is regulated. So I would really not say that today we are in the position in Europe to judge on the development, because we are, let me say, on the first steps to this. There is no disruption as of today, and let us just remind that the definition of disruption requires mass acceptance by the consumers. So, and again, this is why I like your slide so much regarding the customer acceptance or the potential customer acceptance, because I wonder how EY did find out that people like it or not. It is necessarily on the other side that once we talk about open banking, we would need to agree actually that we think that open banking will be the superior solution for the future. And I'm of course extremely convinced that open banking is definitely the superior solution. Why? Because we have a technological environment around us creating new problem statements, customer-centric problem statements that finally will end up at a bank, and the banks will be required to service those customers in that world of mobility, in that world of IoT, and so on and so forth. So if there is a market that is not ready for that, actually I would say that market cuts itself out of future development. So I only can invite everybody to say, listen, we need to get our hands around that in order to cope with the future, which is unavoidably, like it or not, coming.
Very salient point there, Matthias. Now, you're in an ideal position to answer this next question because you were a founder and CEO of a very successful neobank. So turning to the question of what is a likely successful business model for a mainstream retail bank at scale. So if we looked into the future, I don't know, maybe 5 years or so, how would you see a retail banking model developing?
Believe me, this is what I'm thinking of. Well, not daily, but at least every second day. In particular, learning so much every day about new technological developments, new approaches, and I'm so much blessed to have the opportunity to travel the planet on that topic, actually. So, as said, I think we will see a strong change in the retail and consumer behavior simply because of the technological developments. And again, the retailers of this world, I think, have a closer relation to their customers than banks ever will have. Given the technological interoperability of various industries, I predict, and please kill me on this, in 5 years, I predict that banks itself will more and more disappear. Why? Because it definitely is not a bank the #1 place for a consumer to walk up to once there is a life challenge or problem statement at the customer, which is a challenge. It is the service partner or the product partner on the retail side who is first, and then it needs about payment, or it needs about a cash transaction or a value transaction. So those guys, those brand owners and customer owners will drive the future of retail banking. I'm absolutely convinced of that point. However, banks definitely, or not however, but this means that banks need to reconsider their positioning, and we would have, as a bank, we definitely have one advantage that, for instance, ALM and regulation requires us to KYC customers and to prove the identity and so on. So a bank in future, in this open banking future, maybe is not only this the storage for value as we know it with money, but also the storage for digital identity and so on, and by that can become absolutely new central point as it is not today. So the business model will be changing, maybe in 5 years, maybe in 10. I definitely predict that the banks will furthermore lose their primary relation to their consumers and will hand it over unwillingly to the retailers and the big brands. And however, regulation maybe also supports the banks to enter into new areas, in particular via open banking.
Well, that's a it'd be a challenging time, but also an exciting time. And thank you for your comments on that one, Matthias. Now, what we're going to do is switch back to you, Marika, and see if we have any audience questions that we can deal with.
Yes, so we have one question, but I encourage you all to ask any more questions you are interested in. So the question is, what are the likely emerging ecosystems, hubs, partnerships, and interconnected business models? I think this question can be answered from both you, George, and Matthias as well.
Well, Matthias, you go first on that one.
Thank you so much. That's very kind. So, pushing me to the cliff. No, it is. Yeah, that's a good question. Of course, I would. Maybe there are two dimensions how to get our hands around that question. So the one dimension would be, what is the technical readiness of ecosystem participants, which means how much of data exchange I can already today organize with another ecosystem stakeholder. So that would be one part of it. And of course, if we can answer that question from low to high, all those participants of whatever kind of ecosystems that already today are very well organized in a high exchange of data regarding a transaction, an item, a customer, or whatsoever, actually are definitely more open for any creation of an ecosystem than the ones who operate in a closed shop. First of all. Second, do I think that development will move into the direction that we will have more participants being ready for data exchange than less? I think we will have more, simply because people or decision makers will think about their scalability, and we will find out that the scalability, and by that the achievement of higher revenues and cost reduction, only can be achieved with more people and more consumers and more business instead of less. So mass market retail, I have to say what I'm speaking about. I'm not speaking about maybe wealth management or high-end whatsoever services. Mass market retail for sure will be an environment where we will find most of our partners for open banking. And then on the other dimension, we could think about what are the maybe top 5 areas of pain point delivery, so to say, if I may create that, of pain point delivery to the consumers. And just having a bold guess on this, it might be, of course, living. It is, of course, health. It might be transport. It might be education. So those meter topics, actually, we have to take care of. Of course, there also will be consumption. It might be then traveling. But I think this is pretty easy to walk down, maybe by size of market and by volume or by likelihood of being used. And out of that, actually, you create a portfolio, and then I would say we can get our hands around that question. Does that make sense?
That was a very good answer. Maybe I could just summarize it as my contribution.
Please.
So I think you started by saying the degree of digital maturity, the extent to which data is being shared, and the technological readiness within a market, and then walking through 5 areas or thereabouts of pain point that could add value to customers' lives by taking away those pains. My thought would be that there are that maybe there are only so many participants in an ecosystem that you could conceivably partner with or create, and therefore it's really important for banks and for neobanks to think about who they could build that ecosystem with, because there may not be room for everyone, and so there's no point waiting until and being a particularly late follower. Be best to get in early and start thinking about it before all of those partnerships are taken up.
Yeah, George, that's right. A very good point. If I may add one to this, sorry, and moderation needs to kill me then if that is not good now. But that's a very good point, because this is really telling us that in future ecosystems will not only be created by the quality of your product or service, but it will also be created by the technical readiness. and by the interoperability you are supplying. So that means that having a good service or a good product itself is definitely not sufficient for the future.
Right. Nice, concise response there, Matthias. So, America, so we've got one audience question, and we're almost getting out of time, I think, aren't we, in terms of our overall run rate?
Yes, we should conclude in any moment,
All right.
and we don't have any more questions, so
okay.
You can.
All right, then. So I'll move to conclusions now.
Oh, sorry. We have one more question from.
Oh, okay, right.
Yeah, from Tomasz Ampula. And the question is, do you think that banks will encourage people to use open banking providers, or rather try to convince them to continue using traditional internet banking?
Yeah, I think that, of course, incumbent banks will be acting more defensively, which actually would answer the question. They would for sure encourage people to use traditional internet banking. However, as technology on this point definitely is developing, we will see a situation in which, just take an Uber on Apple Pay experience, right? An Apple Pay experience to me is one of the open banking developments already. It might be a first step, but it's definitely one of those developments. Would you, as a bank, have whatever kind of an option actually to stop an Uber user on Uber driver's guest actually to tell this person, now use my normal internet banking, because this is more secure and definitely better than if you now use this Uber payment process. So I think that banks definitely will try to focus on this defensive development. However, the simplicity of the process and the deep integration of those processes in these combined value chains will make it simply impossible to disintermediate by the bank and stop the customer from using an open banking enabled process.
I totally agree, Matthias. The banks have not demonstrated that they are sufficiently customer-centric, nor have they put sufficient effort into simplifying their customer journeys in the way that that Uber has. And Uber and other platforms have now educated customers in what the future looks like. And once that education has been lodged, there's no going back. So they've raised the bar.
Absolutely.
Okay, America, so we'll now go to conclusions.
Yes, please.
All right, so it's just some key takeaways from my perspective, and I'll give you an opportunity at the end, Matthias, to add your thoughts on that. But my thoughts are, because this is about building a foundation around strong rules of consent, my thought is that open banking will not be a great epiphany, but it will turn out to be a slow burn, but it could well turn out to be something highly sustainable. I think we've demonstrated that the system has the potential to profoundly upend the way we bank, and it should end up in disrupting the sector in the same way as media or retail have already been disrupted. I think open banking could be seen as a staging post along the unstoppable digital journey of customer centricity. And the question is, can banks adjust their offer in time in the manner that we've just been discussing regarding some of those questions? And my own personal view is that new distribution models will be shaped by the big factors of geography, by legislation, by product type and profit pools. And I'm saying that not all banking products will lend themselves to a GAFA/Tencent type platform play. Much will, many will, but not all. What are your thoughts, Matthias?
Yeah, thank you. So it is to be, as you take the more rational part of our discussion, let me take the emotional. It is, George, it is absolutely agree. And I think it is just really honestly the beginning, which only can be killed, by the way, the beginning of a development which only can be killed by the data discussion and the web threats or the internet-based threats, data app use, internet app use. However, this development will be that strong that it will for sure reshape retail and also, for instance, SME banking. Absolutely, and we will see that open banking is not only just talking about APIs and not only just talking about PSD2, it definitely then comes along with open marketplaces, open communities, creating open ecosystems that will absolutely change the full landscape of what we know today is called banking.
Nice summary, and I agree, an exciting time in front of us.
Absolutely.
All right, so just continuing the theme now. So we've finished our talk on as far as the webinar is concerned, but just to whet your appetite for what else is coming up or what the current resources that are available, Infosys is combining with Efma and doing a webinar on the 23rd of May at 1 o'clock Central European time. In addition, there are already some materials that are available on efma.com. So there's a point of view that's been done between BCG, the consulting firm, and Efma, asking the question, are banks open to open banking? Members can download that on efma.com. And equally, Wavestone have done a report on building the bank of the future, the first steps of open banking. And again, members can go to efma.com and download that. That's it from myself and from Matthias, and Mirka, over to you.
Thank you very much, George. I would like to thank you all for joining us today. I would like to thank especially our two speakers, George, who stayed up very late for this evening, as I believe it's around midnight in Australia right now, and Matthias, who, just like George, provided us with very useful and interesting insight in this area of open banking. You will all be sent follow-up email later, which will contain video recording as well as presentation you had a chance to see now. Please do not hesitate to contact us if you have any questions. So good night to George, and for the rest of you, enjoy the rest of your day, and thank you for joining us once again.
Thanks to everybody.
Thanks everyone.
Thanks. Have a nice day. Bye.